So thank you, first of all, for participating, everyone, on this panel. Why don't we start by everyone introducing himself? And let's start with you, John. And let's go all the way to Nguyen.
John Maloney. I'm an economics lecturer in the University Business School.
Craig Wright. I'm still Craig Wright, and I'm the same one who was just before.
I'm Sebastian, an economics student here, finished last year.
I'm Jimmy Nguyen, CEO of N-Chain Group. I like big blocks and I cannot lie.
I'm Gihan Morisinger. I'm a mathematics lecturer. I lecture in cryptography, and that's my interest here.
Cool. So I know Gihan and John, you already have a lot of questions that you would like to ask Jimmy and Craig. As many of you and I certainly do have some questions. So we'll start with John and Gihan's questions, and then open it up to the questions that you submitted via SurveyMonkey. And then we'll do a live debate, and you can ask any question that comes up to your mind during the debate that we're having right now. So, John, why don't we start with one of your questions?
Well, this is about the future of Bitcoin. It's going to be mined at the rate at which people solve these algorithms, and then is it 2040, then the supply is going to peak and it's going to reach the ceiling.
2140.
2140?
21,
I thought it was 2040.
No, 2140.
Oh, well, okay, it's a long way in the future.
We won't be here.
Speak for yourself.
All the same, I think why it's been so volatile recently is that when the demand goes up, the supply doesn't match it. And it seems to me rather a rigid system, even compared with something like the gold standard, where in the end you can always dig up a bit more gold. Aren't you likely to find that because the quantity is going to be held constant, the price is going to continue to be very fluctuating?
Right at the moment, yes. But that's because it's a speculative bubble at the moment. There are pluses, minuses, and all the rest, and people are hoping for what the future of Bitcoin is. Now, the reality is it's not an exponential system, as some people think. It's a logistic system, so it's an S-curve. There is a definitive limit which comes as you get more and more people using Bitcoin. It starts to flatten out, and you get to a point where demand sort of tapers off because everyone has money. And if people are using Bitcoin more as money than they are fiat, you end up with a state where you have natural fluctuations based on the market, depending on countries and other such things. Even the gold standard, which many people don't like, led to fluctuations, but the general problem wasn't a global fluctuation, it was localized fluctuations. At the extreme, like the gold standard, governments will complain, say how horrible it is, just like Greece is saying how horrible a euro is at the moment, because they want to be able to spend more than they're actually bringing in. And once you start governments saying, I want to be able to spend whatever I can, and we have a system where we can't easily say, what have you spent, unlike with a blockchain, and you can say, well, this is exactly what the government's spending. You get to the scenario where governments will basically vilify something not because they're being fiscally responsible, but because they get the opportunity to blame something else other than themselves. And politicians with a 3-year lifespan don't care that we have 10 years, 20 years worth of problems because they won't be there.
Can I address that really quickly? So the thing you have to understand is if you've been watching Bitcoin in the media, there's this dramatic rise of attention over the last year in the media about Bitcoin because its price rose dramatically starting about a little over a year ago. And that's what led to this mad frenzy. And as Craig said, the price of Bitcoin now is a lot driven by speculation. It's not based on utility. We think the value of Bitcoin over time will stabilize and grow in the form of Bitcoin Cash because it's going to be usable for many different things, therefore it will have value. Right now, the value of Bitcoin Core is much higher than Bitcoin Cash for no reason, because it's older and more known, but not because it's more usable. And once Bitcoin Cash becomes more usable, I think the price volatility you see now, which is just based on, oh my God, people going, oh my God, I gotta get in. Oh no, something happened, I gotta sell off. that will stabilize. The value of Bitcoin Cash will rise because of the fixed cap of 21 million coins that will ever exist. And then you will be using fractions of coins, which will be denominated in different units by some point. And that is a future that'll come, but right now people freak out because of the volatility, because the price isn't really based on anything other than people want to get in knowing there's only 20 million coins, so I got to get some now, but not because you're really actually using it for value. So the value now is just kind of speculative. We're fighting for the long-term value of it that we think will stabilize the price at a much higher number.
Absolutely, John.
Yeah, I mean, as its most basic, m times v equals p times t. If you hold m down and t is going up as the world grows, p has got to come down. So this is saying that we're going to have to get used to the idea of falling prices. People are going to accept falling wages and so on. And it may happen if you wait long enough, but we simply don't know. As regards Greece, I think the euro is a lot more than a scapegoat for the Greek government, though it might be that as well. I think the European single currency has done terrible damage to Greece, would have done whoever was governing it, and it is a warning about what happens when you can't increase the quantity of money.
I'll address that by first of all saying, if the Greek government had Greek currency, they'd be in bigger problems. Why? Because they'd print more. We all know what happens when you start printing more. When you print more to pay debt, but people want it in US dollars or euros, then you have to print more the next time to pay your debt. And you have to spiral your debt. And we saw that in Zimbabwe recently. We saw it in the Weimar Republic. We've seen it all over the world where governments have been fiscally irresponsible and people have lost faith in their governments. That simple. Now, as for this false notion that everyone loves to say about not spending in a depreciating economy. I'm from tech. How many people here have bought a phone in the last year? Hands up. But it will be cheaper and better next year. Why don't you wait? Honestly, it's going to be twice as fast. If you'd waited, you'll get the iPhone, I don't know, 20X, whatever, I don't care, and maybe they'll have new flashy stuff, and it will be cheaper. Why not? Why don't you decide you're not going to buy these things? Yet we do. We buy computers that are depreciating. We buy goods that are depreciating. The truth of the matter is, these false allocations of economics that, like the whole thing of market for lemons, they don't stand empirical data. You know what? Akerlof got a Nobel Prize for crap. And I'll say that because all the data shows it was crap. They sell cars at differentiated rates. Different car places sell cars at differentiated rates. Every bit of data said he was wrong. And you can say, oh, I've got my academic hat on and it's great because economics, except there's another form of economics, it's called reality. It's called applied, and that matters more. It doesn't matter whether you go P by whatever and whatever else and take a Keynesian formula and make up shit if the data shows you're wrong. That simple.
You tell them, Craig.
Well, if I could come back on that again.
Please do.
I wouldn't compare the state of Greece with the state of Zimbabwe. I'd compare the state of Greece with Greece when it did have its own currency. And when it did have its own currency, it wasn't going through a depression worse than that of America in the 1930s. Now, as regards to the thing of prices coming down, yes, of course, some prices are going to come down because costs are coming down relative to other costs. What I'm saying is if we had a generally falling price level, or rather we had a sort of deflation, a constant quantity of money and transactions going up, would people change their behaviour so prices were flexible and it didn't cause unemployment?
The Gilded Age.
Perhaps it wouldn't, we don't know.
Actually, we do. There was a gold standard across the world led by Britain. And between those years, people talk about the crashes, which was smaller than any we had with fiat currency. They forget that gold wasn't stable. Part of this was a fluctuating price between gold and silver. But when gold was stable, the price differential actually held and dropped, and prices dropping still led to the highest rate of growth in the last 200 years. So we can look at Greece and say, it's worse than 1930s, except it's not. I can tell you right now there are less problems in Greece than there were in the 30s in America or Greece. We can tell you right now, you can argue that this is so terrible, except the government is spending more than it's earning. It has an aging population, it has a lower sort of export rate, and you can say what you want, but the fact of the matter is it's a political situation where people don't want to address the political situation. Most of the people in Greece are ended up being put into basically bureaucratic jobs. They're not producing, they're sucking off parasitically, and that means they are wasting. Say what you want, you take, you don't build, you consume, you lose.
Well, Greece is worse off than America in the 1930s in the sense that the unemployment rate is higher. As regards the gold standard, we've had about 100 years since the world went off the gold standard.
The average person in Greece today has 80 times the amount of free money as people did in 1932 in America. There are not people starving to death. There are not children who cannot eat. There are not people having to go across the country in freight trains who haven't eaten for a month.
Well, of course they haven't, because we've had 80 years of growth since then. But it's in a worse depression in the sense that there are more people unemployed in Greece than there were in the US in the 1930s. And this is due to an uncompetitive economy which got part of this sort of insane experiments of a European single currency. And that's
It is not competitive. Why? Because they're not giving what people want. You cannot economically control by a government mandate. There is no central planning that works.
Gentlemen, I think may I interrupt you? I think we'll have to go to one of Guyen's questions now, otherwise we'll never be able to answer all your questions. So, Nguyen, please do ask one of yours.
Right, thanks. So, ownership of Bitcoins is essentially ownership of the private key. Is that a fair statement? So, and you've got your encrypt part of your company, which is about keeping the private key safe and enabling the transactions. So some of the questions about Bitcoin ownership are how do you ensure that you do, on the one hand, keep your private key safe from other people stealing it, and how do you also ensure that you don't lose your private key, essentially losing all of your Bitcoin? So can you speak about that?
Okay, that's part of what we've actually been doing. We have a number of patents and other such things to do with threshold technology. Mm-hmm. We have other control techniques that allow you to split and have basically secure escrow. We have ways of ensuring, even without CLTV or other things, that money is distributed at certain times. We have basically you'd know, but I'm not sure if everyone here would know, with an RS pair in a ECDSA key, if you sign the same thing twice, of course, that means that you expose the signature. But you can also have additive keys. Now, that means that you can degrade over time a key so that you release parts of it. So, for instance, I can have a system that allows payment to my family at set times. Not with the idea like a trust now where I set something, if my kids pass university and they're 25, they get access to a trust, but courts overrule that all the time now and say you're 18, you're of age, you get the money. I can actually set the rules I want. So that would allow things to be paid in that way. Yeah. And with other techniques, like we're doing distributed blinding, would allow something like a Coinbase to act as a secure provider without even knowing what they're securing.
Yeah. So you can assure anonymity and at the same time ensure that you don't lose the
I'll say pseudonymy.
Yeah.
I don't like true anonymity.
Okay.
It's the old Greek legend of the Ring of Gyges. If someone is purely anonymous with no link to anything, how do you control things? Yeah. There has to be a way of linking that back. you and I deal, then we might be private, but we're both able to prove the other person dealt with me.
So yeah, let me explain that a little bit more. We know at nChain that security of cryptocurrency, in particular Bitcoin, is a major concern for both consumers and businesses. So a big part of the work we're doing in our innovation team and Craig's early work is focused on cryptography and security improvements, because people don't want a Mt. Gox type hack that happened in Japan and all of a sudden all their Bitcoins are stolen out of an exchange. And so some of the things we're working on are techniques that allow an exchange operator or a company that is where you're buying and selling or holding your Bitcoin to be able to confirm and process transactions without ever holding your full private key. That sounds crazy and weird, but through a lot of mathematical and scientific innovations Craig and team have developed, we have a number of patent applications on our portfolio for things such as a deterministic key generation technique, a secure split key technique where portions of a key are split into fragments and then be able to communicate it in a way that you can't ever hack into one place and get a full private key, and therefore, even if you hacked Coinbase or some exchange operator, you couldn't get control of your consumer's Bitcoin. We have a project going on right now, actually, in Japan, our first major business deal with SBI Group, which is the major internet financial services conglomerate in Japan, has 8 crypto businesses. They're launching a major crypto exchange later this year. They're concerned about security, and we are helping them design and implement what we think will be the world's most secure new wallet system, implementing some of Craig's IP and the IP from our company into a design to allow them to operate in a way where this worry about what happens to your full private key, what if I lose it, there's ways to reconstruct it. There's ways for them to operate without ever holding your full private key, so that even if you hacked one of their servers, you can't get control to customer funds. That is a simplified way of saying we are working with others around the world to make crypto safer. And there are other companies, not just us, that have developed things such as backup systems for your private key that can be constructed electronically or in paper. If you hold Bitcoin and you don't plan to trade it anytime soon, please move it off your exchange. Don't leave your coins on an exchange, move it to a hardware wallet or some other system where, unless you're planning to trade it, there's no reason to leave it on an exchange. So there's some practical things, but that's part of what our whole technology innovation program is designed to do, to make it safer to transact with Bitcoin.
And we're also doing some other things with tokenization, which Professor Maloney would actually like, which we're enabling like governments or banks to infinitely tokenize, say, fiat currency. So they could invent as much money as they want and put it out there on the blockchain and use the security of Bitcoin to actually still secure fiat. And then we get the scenario where fiat and a single currency really get to compete. And my idea of an experiment and the traditional fiat one can compete head to head, and we'll see which one wins.
So leading on from that, we've got, I think some of them being notional don't actually exist. We've got about 1,000 cryptocurrencies, at least people are talking about.
Way too many.
How many of them do you see surviving? Just Bitcoin or several? Just one?
One.
Right.
And is that the most secure and efficient outcome, and why is that? So is that because the miners will end up mining on the most profitable chain, which is the most adopted chain, or what is the fundamental reason for ending up with one particular one?
Anyone walked around with 6 different currencies in their pocket before and tried to spend 6 different currencies? If you go to Zimbabwe right now, the government gave up on money. The government actually decided, bugger this, and I've got a $100 trillion Zimbabwe note somewhere at home, but they just stopped printing. So people use US, or they use pounds, or they use euros, or they use yen, anything they can find right now. So imagine you're a shopkeeper and someone wants to buy and sell things with you, and they come in with a euro today. And you've got to sit there and you've got to try and convert and find out what it is and look at the market rates. And tomorrow someone else comes in with US dollars, and you've got to sit there. And it's much easier if everyone uses the same thing.
Most of the coins exist today because someone's just trying to make a quick dollar or quick pound by launching a new coin or a new project. At the end of the day, as I explained, if all those things are possible on one coin, why do you need the others? And I think it'll take some time. You know, there were some that birthed like Ethereum because they wanted to do smart contract capability, which people did not think was possible on Bitcoin because some people turned off some of the opcodes. Now that they're restored, you have to ask yourself, how much do you need Ethereum anymore? All of the other bajillions of coins are there mostly for ICO fundraising as a replacement for typical capital raising for ventures. If we demonstrate all these capabilities are done on Bitcoin Cash and can also operate as a payment currency, we believe it's going to end up with one coin. I don't think that day is going to happen tomorrow or next year. But the utility of all those other coins is going to be revealed as almost non-existent, and therefore their value will dissipate.
Should we take another question from you, John?
Yeah, I had one.
Well, you don't have to. I mean,
Well, how far do you think governments are going to try and get on with the act and regulate all this?
It's already regulated. I've got a law degree, Masters of Law from here in the UK, and I'm doing my doctorate over at Leicester at the moment on Bitcoin and legislation and all the rest. And the reality is, as soon as we say Bitcoin is money and shares are securities, it's already regulated. I mean, we have the situation where some people in the Caribbean will be calling Bitcoin legal tender soon. Once that happens, and once it is an official forex, then it's very simple. Whether they like it or not, it's already covered.
It's like the emergence of the internet in the 1990s. You know, as a lawyer at the time, people looked at, oh, YouTube's arrived. Oh, there's all this infringement happening of copyright. Do we need new laws? The reality is what legal systems do, having been a lawyer for 21 years, I look at this, is they apply existing law to new technology. And as Craig is saying, what most governments are doing are looking at cryptocurrency now and saying, oh, do existing money transmitter laws and money service businesses laws apply to a crypto exchange? If you're running what is like a Coinbase and you're holding customer funds and allowing the exchange of something of value, do you need a money transmitter license? Or do you need a special license? So most governments are now saying existing laws apply to crypto. They're doing the same thing with ICOs and saying securities laws, which require if you're doing like an initial securities offering, right, and selling what is a security, you need to comply with securities offering laws. There are some governments that are saying, oh, do we need to enact a special law related to cryptocurrency? And for the most part, they aren't. They're just recognizing that existing money transmitter laws, existing securities laws apply to cryptocurrency. In the United States, there is some movement by some states to try and appear as if, oh, we're very crypto-friendly, come do business here, by enacting laws that signal that. So for example, in Delaware, where most corporations in the United States are formed, it's a tax and corporation formation-friendly state, they've enacted laws already saying if you record your shareholder register on the blockchain, it'll be recognized as legitimate under Delaware corporations law. If you have financial and corporate records on the blockchain, it'll be recognized as admissible evidence in a court of law. Arizona's done the same thing. Wyoming's just enacted 5 bills that don't do anything other than say, we recognize that things you do on the blockchain and with crypto are valid here as they would be if you did them off the blockchain. And it's designed to send a signal, hey, come here, do business here. We want all of these new crypto businesses. But essentially, the laws exist. It's just a question of applying them because people who started the ICOs and these exchanges didn't want to have to comply with the traditional laws.
Yes, I wasn't just thinking of regulation in the legal sense. Clearly, cryptocurrencies bypass central banks. Given the record of central banks over the last 20 or 25 years, that might well be a good thing. Do you see central banks sort of getting in on the act and getting hold of bitcoins? And to try to control the economy via the Bitcoin if people refuse to use the fiat currencies any longer?
Definitely. I'm not a Keynesian, as you probably guessed, but at the end of the day, if a central bank wants to be a pure Keynesian, not a neo-Keynesian, but a pure Keynesian the way Keynes actually said back in the day, they can right now. They can actually buy in the good times money and spend in the bad times. They can take out loans. They can do everything. It doesn't change because it's Bitcoin. The difference is, though, it's transparent. Right now, American sort of government ideas of what they have in money is somewhere between 1 and 5 times the amount that they say. So they have no idea They don't know how much is in the euro-dollar market. There are lots of speculative amounts, and they like to say, oh, well, we think we've got this amount, and it fluctuates. And if your value of money goes between 1 and 5x, there's something wrong. With Bitcoin, as a basis for this, it'll be a little bit more honest, because you'll be able to say, well, we've got money out there somewhere, we just don't know where it is, which is much better than we actually don't know what the hell we have.
I think a lot of governments are afraid of it, but we predict a day where you will see digital fiat currency, where a currency that's fiat-backed, issued by government or government banks, done on Bitcoin Cash as a token.
So why do you think governments are afraid? So there's one question coming directly from the audience that asks the question, you know, China shut down Bitcoin exchanges. What, is it an uncertainty? They don't know what's going to happen?
Loss of control. Governments have control over currency, right? That's a historical system. And that is one of the most central elements of control they have in society. And I see what's happening in China, not that China's government and businesses look and say, we hate crypto. I think what is happening there is very protectionist for the Chinese RMB. Because I know China's government agencies are looking at research and innovation opportunities to create a digital RMB, right? So it's basically preserving their ability to do their own. That's what I view it as. I don't know, Craig, if you think of it differently.
I'll say that's actually false. The media likes to say China shuts these things down. It never has. There is not a single piece of legislation on earth anywhere that bans Bitcoin. And I'll explain the most onerous crypto legislation in a second. In China, what they did is they said existing law applies to crypto. Crypto exchanges have to basically be regulated the same as every other exchange. The difference was everyone decided to be pirates at the beginning and go, we're crypto, we don't need any regulation, we don't need to do everything that everyone else does, so screw you. And the Chinese government came along and said, sorry, you're wrong. So it didn't ban cryptocurrency, it made people actually follow the existing law. Now, the most onerous law in the world is Libya right at the moment for cryptocurrency. And Libya says you cannot use any cryptocurrency, and they have two exceptions. One, electronic currencies that are linked to credit cards such as Visa or MasterCard, and Bitcoin Core and Bitcoin Cash are both on credit card systems. And two, no currency that doesn't have a physical form. And we actually have physical Bitcoin. People minted little coins and silver things and whatever else. So
got one in my briefcase.
Both of those are wrong. So it may ban Dash, it may ban all these other things, but it doesn't ban Bitcoin.
Okay. So I'm sure you're aware of some environmental concerns that have been around Bitcoin. So there's the Digiconomist Bitcoin Energy Consumption Index, which estimates that mining uses about 60 terawatt hours per year, and they say that that's more than the entire Republic of Ireland or Denmark use.
And banking uses about 750 petawatts a year today. Now, the difference is it's all about block size. The amount of energy for mining a 1 meg block is the same as mining a 100 terabyte block, because it's the same hash puzzle. So if you have more transactions, the amount of electricity per transaction is less. So if we want to be environmentally friendly, raise the block size.
We like big blocks. Yeah. The short answer is people focus on it because they see the mining rigs and how much power it takes, but no one sits back and goes, well, how much power does it cost to run the Visa and MasterCard payment rails? How much power does it take to run all the banking servers? How much power does it take to run our wire transfer services that are out there, our money transmitter services? If you added
Christmas tree lights,
it's going to be more.
So on the technical question, this is ASIC based Bitcoin. How important ASIC chips? How important is proof of work as part of the algorithm, as opposed to so Vitalik Buterin on the Ethereum project is trying to move to proof of stake, which he says is more environmentally friendly. You say this is going to ruin it, and they should go ahead. So what is the importance of Asic chips?
Okay, I wrote a paper, way back. Initially, the version was 2010, and then another version in 2011 that I presented. I talked about botnets and other such things at a conference over in Western Australia, and one of the issues I was looking at was Bitcoin mining. Now, it wasn't Bitcoin mining the way that we were thinking about. It was Bitcoin mining by criminal botnets. And some of these botnets were getting to 10 and 20 million machines. One single Asic device now exceeds an entire 20 million machine botnet. So a single Asic device that can't easily be compromised by a virus or a worm or something like this, that is run commercially, destroys all the criminal activity that was starting to take over machines to mine in a single stroke. So that's how important they are. As for proof of stake is an asymmetric game. If you have money, you have more money to leave aside. People who just eke by don't have a lot of money to vote with. If you have to leave your money out for a month, say, to vote, that's a cost. Rich bastards get to vote more. So it's a thing where rich buggers like me get to sit there and say, I will set monetary policy, and I will do it. Why? Because I like being rich. Whereas proof of work is competition. And rich buggers like me have to actually run up new mining rigs and invent new systems and keep doing things, because otherwise we find very quickly we're not. That's the difference. So proof of stake is a great system for people who are Russians and like oligarchies, and they're used to it and they understand it. And if you're rich, you want to stay rich. And that's what proof of stake helps. Proof of work means you have to actually fight and compete and do all those things that most people hate, like working your butt off.
Okay, we don't have a lot of time left, so I would suggest we do move on to the audience's questions. And you've already submitted some, which are some of them really interesting, some of them also
Not so much.
interesting in a different way. So one is saying, what is the best way to become proficient in writing upcoming applications that make use of the blockchain technology? So you mentioned Nakasendo, for example. How many people are working on applications? How easy is that? How do you see that moving forward?
All right. What you need to first of all do is find a problem that needs a solution. I mean, that's the easy bit. There are lots of problems out there. How do you make it easier? How do you make it quicker? How do you find something that people are going to save money on? Some of the technologies we're bringing out are things like bilinear pairing, oblivious transfer, whatever else. Now, to most people, apart from the guy at the end here, they mean nothing. But what that enables is secure voting. It enables access to medical records. It enables transportation and logistics systems. Start thinking about where there are inefficiencies. Anywhere there's an inefficiency that you can basically find a solution that is quicker and faster and simpler, people will pay you money for. That's it.
Let me answer that, because I'm not the coder, I'm not the developer. And so, but what I do see are two things: companies that come approach us to invest in their new projects, and also I see the developer community wanting to learn more. There's a shortage of good developer talent in the blockchain world because, this is a very new field. So we're trying to support funding for developer training programs around the world to teach them about blockchain and Bitcoin Cash. Craig's got a partnership with an engineering school in Paris where we're trying to do programs with them where we give them projects and help them train things. So if you're not coding or you're interested in coding, take a class or two. Most of you probably aren't in that field. So what I would do is second Craig's suggestion of finding a problem to solve with a good application, because the power of blockchain is the ability to eliminate intermediaries, people in the middle that you need. And whether that's for a stock exchange, whether that's for managing performing rights in like the music industry, those companies that have to track when songs are played and pay all the songwriters, right? Anything where there's somebody in the middle, or there's information that has to be recorded somewhere in a ledger, in a register, like recording IP rights, recording real property rights. There are ways to do that more efficiently on the blockchain. And those are the people who come up with ideas to going, oh, I could do that by eliminating this middle person, taking out the escrow company, taking out the title company when you buy a piece of property. Those are the solutions I see being presented to us on our investment arm. And when I see a really good one, I go, aha, we'd invest in that.
So from the user point of view, I mean, we've just had an entire session explaining how this actually works. So how do you get users to make use of spend Bitcoin in a way that is easy? So you have an investment in Centbee, and I'm quite excited about the beta that is coming out this month, I hear. Will it just be like sending a WhatsApp message, or ultimately, how do you get your grandmother to use this?
Basically, the solution there is, yes, it will be that simple. That's what we've been looking at, and that's why we're funding companies like Centbee. And at the same time, we see a bigger market in places like Africa and certain parts of Asia and South America initially. That's why we're going down there and traveling to deepest, darkest Africa and everything like that next week, and all the rest, because there isn't really all that sound of money in many of these places right now. There are some solutions, but they're expensive. There isn't a way of saving money easily. I mean, it's still a group of countries in the center of Africa where people save by actually buying bricks to build a little bit more of their house. When you get to that sort of scenario and you can't bank and you can't do things, then that's a different world. And it doesn't need to be large amounts. If we can get people to be able to save the equivalent of a US dollar, that means nothing to most people in this room, but it's life-changing for people in that part of the world.
This is the future I see. To answer your question, is it going to be like using WhatsApp? Yes. Right now, I've got the Coinbase app on my phone among various apps. I can see what the price of Bitcoin and Bitcoin Cash is. I could send money to you, Sebastian, but I would have to get your actual Bitcoin address, which is this long string of characters.
We can make that happen, though.
Sure, got it. He's got more in his wallet than I've got in mine. Where there's this long string of characters that you're not going to like, type and remember. You're going to like, oh, send it to me. So sometimes what people do now are some apps will represent it in a QR code that you will scan and send. When we sometimes have to send Bitcoin Cash when we're paying for vendors and people like that, I just get this long string of characters. I send it to my finance manager and he does it manually. That's very cumbersome. Your grandma's not going to use that. Centbee is one of these apps we saw where they treat it much more like a social media platform. You download the app, like WhatsApp or one of these other communication apps, it automatically will ask you for permission to access your contacts on your phone. It will search for people's phone numbers and emails, and then allow you to connect with them as contacts on the app, like money transmitter apps like Venmo in the United States. And then using that with the names in your Outlook contacts, or whatever you use, you'll then be able to send people money through the Centbee wallet. They're working on a merchant payment system so that you could go to a merchant and stand, let's say, at a Starbucks and either pay from your wallet with a QR code to something that the merchant shows, or we've seen a great company that we think is very exciting that has a near-field communication mobile wallet that uses NFC technology like the Apple Wallet, where you just press your thumbprint and using the sensors in the phone and the app, it will automatically pay to the merchant's wallet, or you could pay touching my phone to Sebastian's and send money just using NFC technology.
So that is hand cash you're talking about?
It is hand cash. We like them a lot.
Yeah, cool.
Can I just ask a cryptography question?
Sure.
Yeah.
So we know the two cryptographic protocols you are using are the SHA-256 hash algorithm, and you're using a elliptic curve digital signature algorithm. So we know the NSA is kind of moving away from elliptic curve algorithms, or at least they're concerned about the possibilities of quantum computers. That's one concern. And also, how do we know that there are no backdoors, for instance, in the elliptic curve, the way it was chosen? So that's what some people might be wondering about in terms of Bitcoin.
Number one, I don't believe in quantum computing. We got to 5 physical qubits in 1985, and that fell apart because of statistical calculations. And then in 87 and 89 and 92 and 93 and 95, till now, where 18 months ago IBM announced it had 5 physical qubits. And then it fell apart, and no one's heard much about that since. And we're going to try new stuff again. We just need a few $100 million more from government. So far, it has produced nothing, but it has sucked billions. There is no advances in technology, and even if there was, it doesn't scale like Moore's Law. By the time we actually solve it, Moore's Law means we'll actually have faster phones than most quantum computers will ever be. And let's see, to actually break ECDSA, we're talking Grosvenor and Shor algorithm and whatever else, so we won't even get into a key that hasn't been exposed. So Bitcoin address is a hash. That'll take us 1.5 trillion years, so we'll ignore that one. After you expose your key, a facility that is about 10,000 hectares in size would be able to do about 3 ECDSA keys every year at a cost of about 100 to 150 million a key. So if you have a lot of money in a single key and you're stupid enough not to put them across multiple ones, you could maybe have a 15 of 15 key, and that'll take 5 years for them to crack after you've actually exposed the key. So every 5 years, you've got about 3 to 6 months to move your money, or they might steal it. Or you could just put it in 100 addresses, and they can't do it. So economics is this thing everyone ignores when we talk about these things. Oh, we'll break a key. At what cost? Even if someone finally invents this quantum computer, this mythical thing, and D-Wave hasn't, then, well, who's going to spend hundreds of millions of dollars to steal your wallet with $5 in it? I mean, maybe the Greek government.
Let's take another question from you guys. With Bitcoin fluctuating in price so much, how is this a viable currency for the future? Is there someone who's really concerned about the volatility, who doesn't want to risk it? As a merchant, what do? You convert it to fiat? Are there solutions for that? How do you go about that?
We're going to see the introduction, especially as we get more and more scripting, of smart contracts that allow derivatives. Once you actually have things like even simple derivatives such as options, once you have pegged atomic exchanges of fiat values and allow people to trade instantly, you open up all these things that currency traders do now. How do people trade internationally when there is so much volatility? I mean, the British pound has gone from $1.12 to nearly $2 in a year. I mean, I made money because I put stupid bets on every now and again. I don't have time anymore, but I used to. I used to do things like put it 50 cents below, and I've actually caught things because of that, because you just sit money, small amounts, and flash crashes like happened last year. You wake up and, oh, look, there's money in my account. Why? Because some stupid trader didn't think about their limits. And the reality is, options will start making that much easier. Once we have smart contracts that peg fiat, it will make it much easier. And once we have the ability to do that, which is coming in the next few months, then we're going to see merchants have a downside risk. Maybe it's 2 or 3% that they lose, but then you put that against an upside. No one complains. I mean, the thing about arguing about volatility is no one complains about gains. And who here is going to say, Bitcoin is too volatile, it doubled in price and I made money, I'm not going to use it? Anyone? Do you think a merchant is going to go, Bitcoin keeps increasing on price, it makes it really hard for me to do the accounting, I'm going to stop using it because I don't want to make money?
Let's open it up to live questions. Yeah, we've got someone over there that I saw first.
Stand up and yell.
We got mics, but you can yell too.
Yell.
Yeah.
Yeah.
This is regarding the long run. You guys talked about having only Bitcoin Cash to survive because this is the only currency that can survive. So I'm assuming Bitcoin Cash also have an up-to-ceiling amount of Bitcoin that can be. So my question is what's going to happen when you reach that cap of Bitcoins? The incentive for mining and verifying transactions are getting more Bitcoins. So what are you going to do then when you cannot mine any more Bitcoins? What's the incentive for miners to keep on going? Do you pay them with or Bitcoins existing in the economy already? And then who verifies that? Alternatively, do you pay them with another currency? In which case, I don't understand why we need Bitcoins.
No, that's very simple and a very good question. In 2140, we'll run out of mining Bitcoin, and we'll have our limit of just under 21 million, which will be 21 quadrillion Satoshi units. Now, what people don't get is there's a mining fee. And if we have everyone on Earth using Bitcoin, everyone spending daily, then the fees will actually pay for everything. If we're talking about terabyte blocks where we have 50 transactions per person per day, and we're talking minimal fees, then we're talking right now of the equivalent of about US dollars, $48 to $50 million a block or more. So I would actually see that it'll probably go down and fees will be cheaper. Then you've got smart contracts that will cost more. Then you've got all these other things. So if you think about $50 million every 10 minutes, it's not earned now. It's way more than is earned now on any sort of block reward. So just the fees, those little bits of sort of leftover Bitcoin add up to a lot.
Yeah, what people don't realize is miners make money in two ways. The mining reward for solving the puzzle and adding the block, plus all those transaction fees I talked about, that when you send a transaction, the miner who does that block gets a little bit of money from you. Over time, once the number of new Bitcoins issued decreases, then the amount of money the miners make from the block reward decreases. But then we believe the volume of transactions being processed on the network will exponentially grow, and the amount the miners make from getting the transaction fees will grow and outpace what the block reward is. And they will be paid still in Bitcoin Cash.
Any other questions? Yeah.
Of mining. So what do you think? What is the future of mining? Like CPU, GPU, or anything different from that?
What is the future of mining?
Yeah,
CPU,
ASICs.
GPU, or anything different than that? ASICs.
Okay, one in the front.
This is a question for Craig, actually. Thank you. With the Bitcoin Cash Protocol upgrade happening on May 15th, what other things do you think need to change on a protocol level? I know many are suggesting.
Well, we've
all
got the
kinds of-
first cap lift up to 32. We'll keep doing that. We want people to understand that this isn't going to break things. So I would like to just remove it today. If I had my choice, it would just be gone. But we will do it responsibly and step through it. Next, there is limits induced on the number of opcodes per transaction. Now, people pay more to have larger transactions. And yes, if you have longer ones, it's going to cost more. It's very simple, you pay more. So we get rid of those limits. We start allowing people to make non-standard scripts because, well, if they're paying for them, allow them. See, this is the thing that people have had, this idea that everyone needs to be equal. It's not. It's a commercial system. People compete to be the best miner, to get the biggest machines running the fastest to do things. And as long as we have that idea that it's not, can I run my basement mining system and everyone on Earth needs to run their basement mining system, we start to understand that we have sort of governments and corporations and everything like that all fighting together to secure the network.
Do you think there's any protocol changes needed to make zero confirmation work for everyone?
Zero confirmation already works. I mean, that's the thing people don't get. It already works. There's a first seen rule in Bitcoin. So that first transaction is seen by everyone, and if you're a miner, you take that transaction. If you are a merchant, you take that first seen transaction. If 20 seconds later, you're still making the coffee and a little thing bingles saying someone's cheating you, then you go, excuse me, sir, there's a camera there. Can you smile for it while I call the police?
Thank you.
We have time for either two very short questions or one long one. Let's make it quick. Here.
Hi, this is for Jimmy. When you said there was a fork between cash and core, and you guys are with cash, but there's people that obviously stay behind, what are some arguments on the other side that's tempting them to stay in that
Sure. The people, to be balanced and fair, the people who support Bitcoin Core argue that if there are security risks if you increase the block size too much, right? That people can flood the network with too many transactions if the blocks are too big. That creates security risk. The main issue is about how to get faster transactions. The core development team and a company called Blockstream support what's called a layer 2 solution called the Lightning Network. So instead of doing all the transactions, a lot of them on the blockchain, they have this thing called the Lightning Network, which operates off the blockchain, and it's their solution to say, I go to Starbucks, I open a payment channel with you as I'm standing at Starbucks, I fund it with my Bitcoin wallet, and then I send money back and forth with the merchant. But then both I and the merchant have to be online at the same time for the payment channel to work, and I have to have funds in there. So I kind of see it as like pre-funding like a gift card with a merchant that then you use to pay. So that's their solution. Their argument is that is a safer and different way to approach being able to do faster payments on the blockchain. We think it's a bad idea, insecure, and funded by banks that support Blockstream.
And they've been promising it for years, right? And couldn't get working yet.
18 months.
Yeah. So, but that's the difference in philosophy.
Let's take one last question, please.
So yeah, my question is, how common do you think it will be in the future for people to actually save in Bitcoin compared to that they save in fiat and just transfer it and actually just use it as to consume?
If I have my way, we'll have billions and billions of people all using and all saving, understanding that they have an appreciating asset in money. In Japan right now, people trust money enough that they actually still hide it under their bed. And the interest rate is actually probably better under their bed than it is in the bank because, well, they're so screwed up that they charge you negative interest rates in some Japanese banks now. Yay, I'm going to leave my money in a bank that's charging me monthly to keep it there. So, yes, I see with that sort of system, people will actually start saving in Bitcoin.
And let me address that. It's probably a good place to wrap up this evening. We foresee a world where Bitcoin becomes just another asset that you use as part of your financial world, where you save it because you're also paid in it by payroll companies who allow employers to pay people in Bitcoin, should you choose. That your online banking is not necessarily divorced from Bitcoin. We believe banks have a role in this world. We're not anti-bank. That they'll start integrating Bitcoin support into the online banking they provide you. And you can have an account that holds both British pounds and Bitcoin. That you can use it to pay for your online bills. And you could pay because vendors and suppliers and your utility companies will start accepting payment in Bitcoin or fiat currency. And it is all that integration into your digital financial universe that we see as the future, and that includes saving and investing in Bitcoin.
That is a nice point to end it on. Thank you, Jimmy. Thank you to the whole panel for participating. And a huge thank you to Craig and Jimmy in particular for making all the way here, offering their expertise to answer all our questions. So thank you very much.